Hey everyone, welcome to this explainer. If you've been keeping an eye on the tech landscape in mid-2026, you already know the artificial intelligence revolution is, hands down, the single biggest wealth creation event of our generation. And right at the center of the whole thing are two absolute heavyweights, NVIDIA and AMD. They are both pure-play beneficiaries of this massive build-out in AI infrastructure. But today we're breaking down the ultimate battle between these Nasdaq giants to find out which one truly deserves the crown for the next 5 years.
Now, both of these companies have handed investors literally life-changing returns over the past decade. I mean, the growth has been wild. But, past performance doesn't pay for tomorrow's growth. We've got to figure out which one has the superior visibility, the fortress-like profitability, and the right valuation to dominate the space straight through to 2030. So, is it going to be the undisputed king or the high-flying challenger?
All right, here's our roadmap. We're going to evaluate these two titans across 6 critical categories: the current AI scoreboard, the trillion-dollar market, dividends and buybacks, the valuation showdown, some real risks you need to consider, and finally, the ultimate verdict.
Let's kick things off with Section 1, the current AI scoreboard. We're looking at scale and momentum here.
So looking at the scoreboard, as of mid-August 2026, the absolute difference in scale between these two operations is just mind-bending. NVIDIA, trading near $225 a share, is sitting on a market cap of roughly $5.45 trillion. AMD, meanwhile, is hovering around $514 a share, with a market cap of about $840 billion. Just let that sink in for a second. NVIDIA is literally more than 6 times larger than AMD right now. They might be playing the same game, but they are absolutely in different weight classes.
And honestly, this massive gap in valuation is heavily driven by one single staggering number: 75%. That is NVIDIA's non-GAAP gross margin for its fiscal first quarter of 2027. Pulling off a 75% margin while manufacturing complex physical hardware, that's almost unheard of, and it speaks volumes about their absolute pricing power.
And that pricing power translates directly into a structural profitability gap. Just look at the quarterly breakdown. AMD is doing great, right? They doubled their data center revenue to a really impressive $6.7 billion, and total revenue hit $11.5 billion. But then, you look over at NVIDIA, their pure AI engine, just the data center segment alone pulled in a massive $75.2 billion, pushing total revenue to $81.6 billion. But here's the real kicker. NVIDIA's operating margin is at an incredible 65% compared to AMD's 17%. So this profitability gap isn't just a fluke, it's completely structural.
Moving right along to Section 2, the trillion-dollar market and the AI supercycle.
To figure out who's going to capture the massive spending wave coming our way, we first have to look at current market dominance. Right now, NVIDIA commands an estimated 70 to 80% share of the AI accelerator market. But here's the thing, it's not just about the physical hardware. NVIDIA has totally locked in developers, researchers, and hyperscalers with its CUDA software ecosystem. When an entire industry builds its workflows on your software, the switching costs to jump ship to a competitor like AMD become astronomically high. But hey, there is incredibly good news for both of them. The pie is getting so much bigger. This AI supercycle is expanding the total market at a breakneck pace. Industry forecasts are actually projecting a $1.4 trillion AI accelerator market by 2030, and the total compute infrastructure could push toward $2 trillion. NVIDIA's CEO Jensen Huang has even talked about a potential $1 trillion in revenue just from their Blackwell and Vera Rubin platforms. Meanwhile, AMD isn't standing still. They're aggressively scaling their MI450 series and landing massive commitments from giants like OpenAI and Microsoft. So there is massive, absolute growth potential for both the leader and the challenger.
All right, Section 3, dividends and buybacks. Let's talk about capital returns. Growth is super exciting, for sure, but how these companies actually reward you for holding their stock for the long haul is completely different. Because NVIDIA is running on those insane 65% operating margins and pulling in tens of billions in quarterly free cash flow, they can offer a really attractive combo. You get a modest but growing dividend, currently yielding around 0.44%, plus massive share repurchases. They're literally buying back their own stock to amplify your per-share growth. Now, AMD, they rely entirely on capital appreciation. Zero dividends. They're 100% focused on reinvesting every single penny back into growth, which makes total sense for a challenger trying to catch up, but it definitely changes the dynamic for long-term investors.
Which brings us to Section 4, the valuation showdown. Are we pricing in perfection?
So is NVIDIA just way too expensive to buy right now after such an historic run? Well, the valuation metrics actually give us a pretty counterintuitive reveal.
Despite NVIDIA's absolute market dominance, it trades at a much more reasonable multiple. NVIDIA is sitting at a trailing price-to-earnings ratio of 34 to 35 times and a forward PE of just 17.6 to 23 times. AMD? They're trading at a trailing PE of 130 to 170 times, with a forward PE sitting up at 33 times or higher. Basically, AMD's price is already banking on near-perfect execution and massive future market share gains.
When you zoom out, NVIDIA's valuation is completely justified by its extraordinary free cash flow conversion and those 75% gross margins. In fact, NVIDIA's PEG ratio, which measures price and earnings against expected growth, often sits exceptionally low, below 0.5 to 0.7 when you factor in multi-year growth assumptions. It sounds crazy, but you're actually getting the undisputed market leader for cheaper than the high-risk challenger.
But let's be real. Section 5, Real Risks to Consider. Look, no investment in the stock market is totally risk-free, especially in a sector moving at this crazy speed. Let's break down the unique challenges. For NVIDIA, the risks are mostly tied to the macro environment. You've got super elevated expectations, potential slowdowns in capital expenditures from the big cloud hyperscalers, geopolitical limits, especially with China, and the looming threat of hyperscalers eventually building their own custom chips to bypass NVIDIA altogether. AMD, on the flip side, faces intense execution pressure. They literally have to perfectly execute the rollout of their Helios and MI platforms, battle NVIDIA's massive CUDA lock-in, navigate margin pressure, and do all of this knowing their sky-high valuation leaves absolutely zero room for disappointment.
All right, let's wrap this up. Section 6, the verdict. Who actually wins the next 5 years? Let's summarize what the data is telling us. AMD is undoubtedly a high-quality challenger, and it probably deserves a spot in a well-diversified tech portfolio. But the data points pretty decisively to NVIDIA as the much higher conviction choice. Why? Because they offer an expanding platform with unmatched revenue scale, 70+% gross margins, massive free cash flow, significantly lower execution risk, and surprisingly, a far more attractive valuation.
The source material we reviewed sums this up perfectly. It states you are paying a reasonable multiple for a company growing faster with higher margins, larger scale, and a stronger competitive position. That is the definition of an attractive growth at a reasonable price opportunity. It's just an incredibly rare setup in the stock market to be able to buy the undisputed wide moat market leader at a materially lower multiple than the runner-up. So, looking at all this mid-2026 data, the margins, the market share, and those all-important valuation multiples, I've got to ask you, what's your strategy here? Are you going with the fortress-like, cash-generating leadership of NVIDIA? Do you prefer the high-risk, high-reward upside of the challenger AMD? Or are you playing it safe and holding both in your portfolio? Think about it. Thanks for joining me on this explainer, and we'll catch you next time.